Good morning, traders. Stephen Davis, RJO Futures, Senior Market Strategist, downtown Chicago. Happy Friday to everybody. Here to talk to you about the grain markets. The January crop report that came out Monday was disappointing to the bulls, unlike the previous 2 years. So as we move forward here, the corn market just really under pressure here. We got low prices and you know, it doesn't mean that there's not going to be rallies in these grain markets. It just means that the rallies will not hold. Typically corn and soybean meal. The rest of January here we trade sideways to lower, and then in February and March it's a more positive seasonal trend for corn and soybean meal to trade higher. And think about it, we're supposed to have all of these acres planted into soybeans, and if soybeans sell off $1 or $2 in the next month or two, this is going to get farmers to not plant as many soybeans as they're talking about. So it's soybean market, we're working on a weekly reversal down today, so pretty important. If soybeans could close higher today in the short term, that would send a message here. So prices look weak. Keep an eye on China. They're notorious to come in here and buy soybeans at lower prices when they look the worst, and they look pretty bad right now. And they're very savvy traders, so China in the past has come in here and bought soybeans, U.S. soybeans, at lower prices. Look for that to happen. There's an economist, a Purdue economist, came out and stated there was 157 million more acres of harvested grain planted in the world in this commodity super cycle since 2006. So South America, Africa, former Soviet Union, and lastly our great country, USA, adding all of these acres. So the cure for high prices is high prices. And the source of this cure was all these additional acres that we brought in here in the last 8 years. So now we're on the other end of this spectrum. And the cure for low prices is low prices. And how is this going to work out? Some of these high cost producers in the world are going to idle acreage and idle production, and the end users who are flush with cash, flush with profits, are going to increase consumption. This does not happen overnight, and it may not happen in the next year, but this is the cycle that we're going through. Looking ahead, what can drive the markets next week? We're closed on Monday, so grain markets will open 7 p.m. Monday night. Typically when there's a 3-day weekend, markets are nervous, but there's not a lot of new news. Maybe more rain in Brazil next week, something like that, but it should be a relatively calm 3-day weekend. I want to leave you with this, similar to last week, the big picture. Don't underestimate a bullish play in commodities, especially food commodities, that threaten the nation's food supply. For example, looking ahead this spring, if it starts raining for 1 week, 2 weeks, 3 weeks, 4 weeks, and we can't plant soybeans and corn, these markets will rally dramatically. So we'll continue to keep an eye on that and have a real nice weekend. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.